Good afternoon, everyone. Today I'm chatting with Jesse Day from Commodity Culture. In today's interview, we get into the recent announcement between Donald Trump slash the White House and the UK for a new trade deal. We also discuss uranium, of which Jesse's got lots of thoughts because he is one of the top experts out there talking uranium on social media. We also get into Jesse's background and how he originally found himself running a YouTube channel that covers commodities. And Jesse lets us know some of the oil names that he's currently invested in and why he likes them. All right, everybody, enjoy the interview. Jesse, it's nice to have you on.
Great to be here. Thank you so much for inviting me on the show.
So, Jesse, let's start off with this. Just at the time of us sitting here together, a big announcement in the I guess we could say precious metals world, but actually more like the world trade order world is this recent announcement that's just come down with uh, Donald Trump and the White House striking a deal with the United Kingdom on some sort of new trade agreement. Now, my understanding of reading about it is that it seems actually so opaque that it's almost hard to even say that they struck a deal. But I'll tell you this much: precious metals are down substantially at the time of filming, so the gold market seems to be buying into the idea of stability. What's your read on what's happening?
I mean, I don't see much stability economically for either country if we're talking about the US or the UK. And I think that Trump's whole approach to the tariffs and trying to strike deals with different nations and calling it a win, I think is a little bit disingenuous. I think his plan is extraordinarily ambitious. The bring manufacturing back to America. We've hollowed out the American middle class. We've moved production overseas. Enough is enough. We need to, bring the American dream home. I get it. I get that whole sentiment, and I think it's a noble goal. The only issue is I think it would take a decade, something like that, to really make that happen, of a very solid, carefully thought through plan done step by step. He's trying to ram everything through before the midterms and hope that he doesn't get a Democrat majority who's then just going to undo everything he did and try to impeach him. So I think that he has to kind of, he's been at odds with the EU, obviously, since JD Vance went there and lectured everybody on free speech and them interfering with elections. Which I have to say, I agree with JD Vance on a lot of the things he said, but you can't just go there and expect people, all the European politicians, to go, "Oh, yes, you're right. Let's now work closely together." So I think this is kind of an extension of the olive branch to the UK to try to normalize relations. And if you go deep down the conspiracy rabbit hole with people like Alex Craner or Tom Luongo, they'll tell you that, like, the financial center of London kind of controls the US government in some ways. So I think there is some truth to that, and I think it's certainly an interesting development. Precious metals going down on the news, that doesn't surprise me, but I think this is going to be a temporary move down. And I think ultimately, you know, China is a very fascinating part of this whole picture as well, because China ended up being kind of the sole opponent in Trump's crosshairs at the end of this whole tariff salvo. First it was Canada, we're going to tariff them, and they're going to be the 51st state, Mexico, I mean, the EU. And then at the end, it seems like China's the one that is really in the crosshairs when it comes to the tariff situation. And, I don't know what the end game is here in this short of time. And so this trade deal with the UK, like you said, it's extraordinarily opaque. It's difficult to get a grasp on what actually the end result is going to be. I think it might be more for optics than anything. And I think in the grand scheme of things, it's not really going to matter that much.
I agree. My concern here, and when I say concern, I mean the gold bug view that I have is that we're going to get a double whammy of inflation over the next couple of years. There's going to be a lot of people hurt by the tariffs, and they're going to introduce a whole bunch of subsidies, which means that they're going to print money just to help the people who are hurt by the tariffs. But all that's going to do is it's just going to flood more money into the system while at the same time arbitrarily raising prices on a whole bunch of goods. And I don't see how that isn't anything but uh, bullish for precious metals. So I normally don't do this in interviews, but it's our first time chatting. I've seen your YouTube content in the past, and I figured maybe we could start off, get a little bit of background on kind of how you ended up here, how you ended up with a YouTube channel called Commodity Culture. What's the story here?
Well, in terms of YouTube, I've had a bit of experience in the past. I'm not going to go too deep into that, but I'll give a little snippet, which is I used to live in South Korea, Seoul, South Korea. At that time, I ran a YouTube channel where I challenged the spiciest food in Korea. And I did the whole thing in Korean. I lived there for 8 years, so I spoke the language fluently. And that actually kind of blew up in Korea and unlocked a lot of opportunities for me there. So I had had experience with YouTube in the past. And after returning to Canada, I ended up working for an investor relations firm in Vancouver, Kin Communications. I got really deeply interested in gold and silver and just the concept of sound money, as well as energy production. And that led me down the rabbit hole of learning about uranium and nuclear energy and oil and gas and all the various commodities that are responsible for energy generation. So really got my mind thinking too that I wanted to create some new project on YouTube related to these interests that I had. And so I started making documentaries. That was how my channel Commodity Culture started. I did my first documentary ever was on coal. I did an oil documentary, natural gas, and uranium ended up being the first piece that kind of struck a chord with viewers and ended up getting a lot of views. And so that kind of launched the channel. Sprott Asset Management was then calling me and asking if they could license it, which was crazy because it was really early in the journey. So they ended up licensing it to promote the Sprott Physical Uranium Trust. And that's how the whole thing got kicked off. And then as I continued on the journey, I realized like, hey, it takes me 3 to 4 months to put together one of these documentaries. And I already had in South Korea, I did broadcasting, I did morning news shows, travel shows, radio shows. So I kind of had that background already. And I thought, why don't I merge these things and start interviewing investors in the commodity space and experts on uranium and gold and silver and all these things. And that's kind of how the journey began for me when it comes to my current YouTube channel.
So I assume that you have some sort of belief system that brings you to commodities, right? Like a lot of us have these ideas that originally attracted us to the space. For me, I just kind of looked at how government spending was completely unsustainable years ago, and it was really, for me personally, it was after Ben Bernanke said the words quantitative easing that I started to look into, okay, well, how do we invest in a world where governments are just allowed to spend as much as they want, and there doesn't really seem to be any kind of regard for fiscal discipline. That's kind of where I started to do my research, and I remember originally at that time, Bitcoin becoming a thing, and, I almost hopped in at, like, $500, but I couldn't wrap my head around how to actually buy it and get in, and then it kinda got away from me, and the more I learned about it, actually, the less I liked about it. Um, that that was sort of my story of how I first got kind of attracted to precious metals. I'm curious for you, kinda what's that belief system that makes you believe in the space and gets you out of bed in the morning, when the times are tough to say, "Long term, I like the direction that this is going."
Yeah, it was definitely, the pandemic that kinda woke me up to a lot of things. Prior to that, I didn't actually have a lot of knowledge in investing. When I was living in South Korea, I went down a bit of a rabbit hole with, the efficient market hypothesis, Eugene Fama and Kenneth French's, theory, and this was, like, post Great Financial Crash, and, like, it was, like, 2009, something like that. And at that time, there was no easy online brokerage services to use, but I got really fascinated by just learning about the broad market at that time and this concept of just putting dollar cost averaging into an index fund. And for some reason, I went down that rabbit hole for a while, but then kind of forgot about it. And once I was back in Canada and the pandemic hit and I was laid off of my job, this is before I started working for an investor relations firm. And I was just getting checks in the mail. And I thought, that's how am I getting paid almost the same amount as my salary to sit at home and everybody else is too? Where is this money coming from? And that led me to realize like, hey, the government is kind of creating currency units and that is going to eventually cause inflation that is going to push the value of the money down. And that's when I really woke up, and I think my first real deep dive into it was Mike Maloney's Hidden Secrets of Money documentary, his like a television series style episodes on YouTube. And then I started to read some different books on the subject, The Creature from Jekyll Island, and and then I started to stack silver. Silver was kind of the first time that I ever just held some sound money in my hands, and that really woke me up. And then I started to explore energy generation. It was just the catalyst for me was the pandemic, learning about how money worked, understanding the difference between sound money in the form of gold and silver and the fiat currency that is issued by governments, and then going down the energy route. There's a great book I read called Energy: A Human History, and that is what kind of sparked things for me to realize, wow, these commodities that generate energy are so incredibly important. Like, I'd never thought about oil as the lifeblood of human civilization before that. It was just something I thought didn't really think about. And then when you realize it and you start to explore uranium, base metals, all of the different commodities that are required for human civilization to exist, that's what sparked the flame in me and made me think, "Hey, I gotta learn about this, and then I wanna put these documentaries out there to kind of educate the people like me, people who didn't have any knowledge about it, to learn about it," which is why the documentaries focus more on the science, history, mining methodology. They weren't investment focused, but that's certainly what sparked the flame for me.
Now, one thing I found that maybe we might find that both of us have sort of gone down this road is that learning about mining from CEOs of junior mining companies is probably about the worst possible way that you could do it. And it's not just CEOs, it's also GEOs. Because a lot of us, we just come from, normal backgrounds where facts are facts and people just kind of say things that are straight up. But then you got to learn that that's just how the world works. We all have our biases and things that impact the lens that we see things through. And when you're talking to geos, for all you know, they own 6 projects that they've been paying for claims on for the last 5 years, and they're quietly trying to sell them in the background. And their belief systems are now structured in such a way that there's certain types of properties that they like better than others. There's certain types of commodities that they like better than others. And the next thing you know, you're trying to ask them questions about stuff, and there's all these other like random biases in their head that prevent them from just explaining things in a straightforward way. And then there's also obviously the geo personality that just can't explain stuff in a straightforward fashion, regardless of what it is, which tends to be a lot of geos I find. And then we got the CEOs who, um, quite frankly, from our experience of interviewing many of these CEOs and sitting down and chatting with them at conferences or having drinks at the bar afterwards or going out late nights, just hanging out. You kind of learn that a lot of them actually don't really know anything about anything other than uh, how to run a publicly traded stock. And I'm curious how you've gone about learning about geology in this environment where so many of the people that we interface with, they either have these biases or generally don't know anything and are just kind of quote unquote faking it till they make it.
Yeah, that's a really good point. For me, I'm a real circle of competence type of guy in that I stick to a few commodities when it comes to investing, which is uranium, oil and gas, and gold and silver. And I don't dive too deep into the geological side of things. For example, when it comes to gold and silver, I tend to stick to ETFs, royalty streaming companies. That's kind of how I model most of my portfolio, is that I'm always allocating the majority of my capital to an ETF. For the oil and gas space, it would be XLE. For uranium, it would be URNM, etc. And so my understanding of geology by project to project is not very up to snuff. Um, that being said, there's certain factors that I look for. For example, when I'm evaluating a uranium company, I don't look at explorers. I generally look at the developers and the big producers. And so, in those types of situations, uh, in terms of understanding the deposits, I'm just trying to figure out. I'm looking at the economic assessments more than anything, and trying to figure out, is this project going to be able to move forward? with these sorts of numbers that they're presenting to me when it comes to net present value, IRR, and things like that. And then looking at what's the grade of the uranium that they have in the ground, what's their plan to get it out of the ground. And those are the sorts of factors that I'm kind of paying attention to the most. So when it comes to like the exact geology, all I'm concerned about is this going to be extracted based on these economic assessments that I'm looking at? Do I think there's a good chance of that happening? And of course, I lean on the expertise of so many of the people that I interview on the show, people like Lobo Tigre, people like Rick Rule. I would have to point to Lobo as being kind of one of the most level-headed guys out there who, when you speak to him about a certain project, I really listen to what he has to say. And there's like a laundry list of experts that fortunately I'm able to have access to and I'm able to kind of talk to off camera sometimes, which is really nice. People like Mike Alkin, who for me is the ultimate guy to speak to about the uranium space. He doesn't like to speak about obviously publicly traded companies or stocks that his fund is invested in. But when it's time to, say goodbye, I can just say, "Hey, Mike, you got a few minutes? Want to run a few things by you?" And then I'm able to kind of get the expertise of somebody like him to shine a light. So I can kind of lean on those people when it comes to the geology.
So when it comes to talking about uranium projects, what is it that you are looking for? Like, are you looking for things that are largely de-risked, like whether we're talking about, say, a next gen or a fission or a can Alaska? Are you looking for things that are earlier stage? What does that attractive component look like for you?
Well, I'm looking for projects that have a pretty clear timeline on when they're going to go into production. I think NextGen is a good example. Obviously, that's the greatest undeveloped uranium deposit in the world. There are a lot of problems in terms of the G&A expenses, in terms of the management just doing wacky things like sponsoring F1 racing cars and hockey teams and things like that. But they have a timeline to production, and ultimately, a company like NextGen, so as I said, I keep the majority of my uranium investments in the larger producers and in the ETF. And then I think when it comes to the eventual inflow of institutional money into the space, which I think is going to be inevitable when it comes to the uranium sector, then I'm looking at what's next after Cameco Kazatomprom. What's the next companies that hedge funds and big institutional players are going to be looking at? And I think next gen is the next in line for that simply by market cap size. A lot of these funds have requirements when it comes to the market cap of companies that they're going to be investing in. So a company like NextGen fits the bill for me despite its issues. And I'm looking, generally speaking, outside of jurisdictions that are too risky. I used to be invested in Global Atomic because it did have a lot going for it. They had their zinc business in Turkey. They looked like they were advancing towards production at a very reasonable pace. The Niger government was very, very supportive of their efforts. The economics of the project looked great, all looked fantastic. Of course, then the coup happened. We saw a lot of issues emerge after that. So I got out of that at a 60% loss, and it continued to fall drastically after that. But I think that was the right decision. So I'm
I'm sorry to interrupt you. I'm actually I want to dig in on that for a second because um, that's something that I actually have been at odds with the uranium community, which, by the way, is a fantastic community. I'm blown away by how positive people are in the uranium social media community. I've like we originally started our platform during cannabis, and there was a lot of cattiness between different people on social media. In uranium, I find people are mostly generally pretty positive. But the one name that I've actually found that I'm in the largest disagreement with the social media world on is Global Atomic. And I've never been able to wrap my head around how anybody wants to take that risk of owning an equity in a country that, quite frankly, like if I were a betting man, I'm not short the stock. But if you put a gun to my head and said you have to bet on this be getting to production or the equity holders taking a zero, I'd pick zero just because of that coup and what's happening in that country. It sounds to me like an insane risk. I don't understand why so many people are so bullish on it. I don't know where the liquidity in that stock comes from and why so many people are buying it. So anyways, I'm sorry to cut you off there. I to To me, that's actually kind of refreshing to hear somebody in the uranium community say that.
Yeah, I think it went from a reasonable speculation to a wild, wild gamble, after the coup happened, and particularly after, like, the Niger government revoked GovEx's license, and then they really were into some shenanigans when it came to Orano, and it you cannot trust a government who exhibits the type of behavior that this new government has exhibited. And of course, we see positive news about a we met with the Minister of Mines and all this type of stuff. And the thing is, there's a bit of a cult around Global Atomic as well. For whatever reason, there's people who are absolutely. It's almost like people who were super married to GameStop or to AMC. It's almost that similar type of mentality that no matter what, this thing is going to eventually work. And people just try to look for any sort of positive signs to reinforce their beliefs in the fact that this stock is going to work out for them. But I completely agree with you. I think, like, I had to ask myself, this is when I sold it, I had to ask myself, today, would I buy this stock? And the answer was absolutely not. So I realized, hey, I'm going to lose 60% here, but I'm going to be able to sleep better at night. I don't see great prospects here. And so I've just got to step aside. And I think that was a really good decision.
You, something else that I find fascinating about the uranium market that I don't really hear a lot of people talking about that gives me a little bit of pause is next gen. When next gen gets to production, and they will get to production, I know that the Canadian government has given them some issues. The reviews are taking forever for them to get through. But let's be honest
Yes.
here, these production numbers that they're talking about, it's going to look bigger than Kazatomprom. And what impact is that going to have on the pricing of uranium, and what does that mean for the level of capital that's going to flow into these junior names when all of a sudden there's all this supply that's coming onto the market?
Yeah, that's an interesting question. First of all, I think next gen is going to end up producing a lot later than they themselves are projecting. Um, I think it's more of a 2030s or later. I think that doesn't matter so much because once we start to see a real mania in the uranium stocks, which I think we will, like I said, I think money is going to flow into projects like Next Gen in particular, because it's the next largest market cap after Kazatomprom and Cameco. And I think that when they do eventually bring it into production, I would imagine whether it's next gen or whether they get taken out by somebody else, I think that's also a very reasonable speculation to make that next gen is themselves are not going to be the current management team is not going to be there producing. They're going to get taken over by a larger player, whether that's somebody like Cameco or Orano or a Rio Tinto, something like that. Um, but I would imagine that they would be disciplined with their production. I don't think that when they do go into production, they're just gonna open the floodgates and start flooding the market with uranium. Who knows? And anything could be possible, but I think it's far enough away that we don't really have to worry so much about that production profile right now. And I would hope that whoever ends up producing, that deposit is going to be disciplined in how much uranium they're releasing into the market.
What one would also think, and I know there's all sorts of stuff on the internet about this, but at some point, just these small modular reactors, once they kind of hit their stride, we're going to start to see them all over the place, and that's going to have to be, one would assume, incredibly bullish for uranium. So I I'm almost bipolar when it comes to uranium. There's times where I'm super bullish on it, but there's times where I kind of look at, like I said, like next gen, and then there's some other really great projects out there that will eventually go online as well that are super high grade. And um, I, I think that part of the issue for me as a penny stock degenerate gambler when I look at uranium is that when you see the grades of these companies that are hitting, they're just so gigantic that it's like if I'm looking at anything that's earlier stage, it's like the bar is so high on what they have to be able to hit. And then there's obviously companies out there like Troy Beaujolais over at I think it's Atha Energy.
Atha.
Yeah.
Yeah.
And like, they got this massive land package, and that's the guy who previously discovered the Arrow deposit or the Brook project, whatever you want to call it. And he's got all the money and tools to go and do it again. Uh, and I know that the valuation's not super attractive right now, but that's the kind of guy who I would bet on an earlier stage project. But then there's, I don't know if there's dozens or if there's 100 names that are those kind of early stage uranium explorers, and it's really hard for me to wrap my head around the risk of those guys being successful unless we're at a point where, like you said, we kind of get this uranium bonanza where capital just starts flowing in and it's almost like a pigs will fly environment.
Yeah, I think that that could be possible for myself. I stay away from all stage stuff in all commodities. Like I said, I'm more of an ETF
Okay.
royalty streaming guy. And then when it comes to uranium, I'm just looking for outside of the big producers, developers who look like they have a path to production, or even and that has kind of started to pay off in the production, but not yet the equity price when it comes to a company like Energy Fuels. They ended up restarting production. Very interesting project. I like the rare earths angle. I think that the market does not like the rare earths angle because people want it to be a uranium company. But I think there's some promising developments there, considering the whole China putting a curb on the exports of rare earths and this whole trade war going on between the US and China. Energy Fuels also had one of their mines fast tracked by the Trump administration. I believe one of them in New Mexico. So some interesting developments there. But that's generally the space. If I'm gonna take some risk outside of the big producers, it's kind of the developers who have either just started to produce or have a path to
Got
production.
got it. I think that that's a very sane and reasonable and rational approach to investing in uranium. Outside of uranium, what are the other commodities, or are there any commodities right now that you kind of have any sort of bullish theses on?
Well, I think the oil sector is being so beaten down right now. I think that the thesis is amazing, and I think it's being disregarded by so many market participants for a number of reasons. Like the disinvestment of oil and gas assets by large institutions cannot be understated because of the whole ESG, and they get these mandates. They don't want to invest in oil and gas. They think it's dirty. I mean, it blows my mind here. Without oil, we could not exist. I mean, the civilization we see in front of us today, we would be, living in the Stone Age essentially. So it blows my mind, that whole thing. But you've got the fact that there is record underinvestment in the oil and gas space, huge, huge underinvestment. You've got the shale oil fields in the US, production starting to roll over in places like the Permian Basin. Um, you've got OPEC Plus, which I believe has far less spare capacity than most people realize. You've got this nutty organization called the EIA, which is essentially an ideologically captured organization that wants to push green energy. And so you can't trust any data they put out. They constantly underestimate, demand, and they constantly overestimate production. You can literally go back and look at their record. It's actually startling. And yet people pay attention to what they have to say. And so I think we're going to see a renaissance in the oil and gas industry up ahead. I think some of these equities are just too cheap. And with oil prices where they are right now, these big producers are not going out and drilling new wells. They're paying down debt. They're returning capital to shareholders with buybacks and dividends, and they're remaining very disciplined. And we just saw who I think it was the CEO of Diamondback Energy was saying that right now in the Permian Basin, the geological difficulties, the headwinds faced by the fact that production is rolling over are substantial. And so when you have an actual CEO of a huge company like that mentioning something, as well as the research of so many people in terms of the production profile in the Permian Basin and the other large shale fields, I mean, people don't realize how much shale oil accounts for modern oil production. It was literally a miracle when the shale oil fields were able to be exploited. And we're at a point now where that miracle is starting to fade. And I think everybody just thinks that, it's that recency bias. Today will be like yesterday and tomorrow will be like today. But when these oil fields roll over, they don't do it gradually. They tend to roll over much more suddenly. And we're going to get to a point where I don't think $60 WTI is economic for most of these companies. And I think that number is only going to continue to rise as we move forward. So I believe we are going to be in a scenario for oil where prices are going to have to go significantly higher. I think these oil equities will benefit the good ones, the producers, and the ones that have excellent land packages with low decline rates. I think that they're going to do really well. So oil's one that I'm massively bullish on moving forward, despite the fact that my own oil equities have been, taken behind the woodshed and slaughtered.
Yeah, it's, oils to me is like the fascinating thing is as a Canadian small cap investor, small cap Steve, there was a time where oil was just this super lucrative place, and like it's weird to me that we look at some of these names where we know that they have assets that are worth a lot, and we know that for them to get to production, it's actually not that challenging. It's not like like a gold company hits like a decent drill result. Well, guess what? They've got to keep drilling, and then they got to keep drilling, and then they got to keep drilling, which means raise money, dilution, dilution, dilution. Whereas you put a drill into the ground for oil, you're you're into production, uh, and that's such an interesting contrast. You think that we could see a point where it actually makes sense to be speculating on some of these tiny little oil names again?
Yeah, I think now can be a good time for that. Again, an area that I stay away from. I'm a big producer type of guy, but I think right now would be a time to do that. Honestly, also offshore things like oil tankers have also been beaten down. I think that's another sector that's really interesting. But a lot of these small cap oil companies too are also paying very large dividends, buying back shares. So I think that's something to be paying attention to right now. I have some concerns about Canada, I will say, due to, and perhaps they're overblown. Obviously, we saw Mark Carney win the election. He's a very big on net zero and reducing carbon emissions, and he wants to keep the emissions cap on the oil and gas producers. I wonder if I really wanna watch carefully what he does as opposed to what he said, whether what he was saying was just to win over a certain crowd, and now that he's prime minister, I'm hoping he has the wherewithal to realize that he needs to exploit these resources to improve the GDP of Canada and get the economy going, and hopefully pressure from Alberta. The whole Alberta separation movement will hopefully put some pressure because the vast majority of the best oil and gas fields are in Alberta. And so that would be a huge blow economically to Canada if Alberta were to separate. So I'm hoping those checks and balances will come into place and mean we will see pipelines built. We will see more oil and gas production coming from Canada. But I have some concerns in the short term.
So, you mentioned that there's some oil names you like. Do you talk about those publicly? Can I ask you to give us some names for our audience that are kind of sitting
Oh,
around, they're
yeah,
building a watch
absolutely.
list?
Yeah, and like I said, I always keep my largest, percentage of capital in an ETF, and that would be XLE, which holds Exxon and Chevron as its largest holdings, and then a lot of other, American oil and gas producers. So that's kind of I always lean on an ETF or a royalty and streaming company. And then I like Surge Energy in Canada. I like my largest single stock position is Whitecap. Both Surge and Whitecap, just the land packages they have, the low decline rates, the reserve replacement ratio of a lot of their assets. There's just so much going for both of them. They're both paying large dividends. They're paying, I think, 6, 7%, both of them. They pay monthly dividends, which is
Yeah,
nice.
I got Whitecap in front of me as of today's trade at 9% dividend yield.
Yeah. Yeah. So very attractive because you get paid to wait. And I think it's only a matter of time. Both Surge and Whitecap have been beaten down to some extent, especially Surge. Um, but I think there's a bright future for both of them, assuming that the Canadian oil and gas story doesn't get too muddied by politics and all this net zero stuff. But I think that's probably more noise than signal. So those are the 2 plays, in Canada. I also like Africa Oil. That's my one, so I lied. That's my smaller cap play in the oil and gas sector is, Africa Oil. They've got, assets in Nigeria as well as offshore in South Africa, Namibia as well, I believe. They're working with they've got some JVs with Total Energy from France, one of the biggest oil and gas players, and again, very, very attractive economics for their projects. And I really like them as kind of more of a speculative play in the oil and gas space.
Tra trading at in I have it in front of me here, Africa Oil Corp was trading at a 11.8% dividend yield at the time of filming. So, um, but these are certainly, interesting names for people who are kind of looking for a bit of a mix of risk, with some upside, but also get some cash flow for their investment. Uh,
Yeah, and by the way, Africa Oil is constantly buying back shares. It's like seems like on a weekly basis, I'm getting pinged with an email. We bought back more shares. We bought back more shares. They're really taking advantage of these lower prices.
So Jesse, we're normally only supposed to do 15 minutes. We've gone on 30. I appreciate
Okay, wow.
you hopping on here. For our audience who wants more of your coverage, where can they go to?
Commodity Culture on YouTube. You can also follow me on X at Jesse B Day.
Okay, I'll follow you right after this. Um, Jesse, thanks so much for hopping on here today. This was a great conversation. I love your approach to investing. You're not on here trying to get us degenerate penny stock gamblers all amped up over something that has tremendous amounts of risk and, quite frankly, is absurd to be looking at. I feel like you're taking a very reasonable and rational approach to looking at the risk curve, especially even taking on some stuff that just generating some dividends, which is pretty cool. Not a lot of guys we talk to in the space who view it the way you do. So thanks very much for hopping on here, and hopefully we can do this again in the future.
Absolutely. Thank you so much, Steve.
All right, everybody. Thank you for watching. If you enjoyed this interview, please smash that like button, subscribe, and ring that notification bell. Guys, also let me know what you think in the comment section. Thanks for watching, everyone.